and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today our conversation is going to be about coal, clean coal specifically, and my guests are Robin Eves, the CEO, and Ignacio Ponce de Leon of Clean Coal Technologies. Gentlemen, thanks very much for being on the show. I appreciate it.
Thank you. Thank you for having us.
Robin, I want to start off with you. Just if you can give us a little bit about the macro picture. I mean, in the United States, you know, the talk about coal, the use of coal, and I know, you know, we've been characterized as the Saudi Arabia of coal. We have a tremendous amount of coal, but there's a lot of resistance and opposition to the use of coal, obviously because of the environmental impact, greenhouse gases, that sort of thing, and also because we have a huge supply of natural gas, which is very, very cheap. But give us some perspective a little bit about the global picture. I know it's not the same as what we're looking at here in the United States, correct?
Right. The global picture for coal is very, very exciting right now. The usage of coal and demand for coal, especially from countries like India, China, is going up every year. And the usage of the power, the building of the power plants, they're building coal-fired power plants in China, I think at the rate of one every week. And so the demand is going to be huge. The question for coal, for it to be a lasting part of the energy mix, is to be the ability to clean it and to dry it. The company that can solve that problem will be a multi-billion-dollar corporation. We believe we've found that solution. Our company has 2 patents, one for cleaning coal and one for drying coal. And we are very, very extensively involved in the Indonesian, Indian, Chinese market at the moment. However, the technology has been designed, engineered over here in the United States. It all is being built in the United States, and therefore, obviously, we are very, very interested in trying to find a solution for the United States market as well.
I see. Now you can explain the technology. Why don't you tell us about it and what's involved?
Yeah, if I just add just quickly to the macro picture.
Sure.
What we see going on is that there's essentially a second industrial revolution taking place in the world. That second industrial revolution is reflected in metrics like GDP per capita and GNP itself that have quadrupled in certain regions of the world.
You're talking about the emerging market countries, China, Asia. Maybe.
Exactly. Now, for them, it's a catch-up game. They have to come up to certain levels of consumption. For example, electric power is consumed at the rate of about 4,000 kilowatt per person in China versus 13,000 in the U.S. In India, it's only 650 kilowatts versus 13,000 in the U.S. So there's a big catch-up going on. We don't think that this is a trend that's likely to just vanish. It's going to continue, and there's still a lot of ways to go. And in the meanwhile, consumption of coal has increased from about 5 billion tons in 2000 to over 8. So there's a 57% increase in 10 years.
And so, but they're not going to be impacted by environmental concerns? Are they just going to basically ignore that?
Yes, and that we get to the technology. Okay, so basically what's going on is that this incredible, unprecedented growth in the consumption of coal is fueling the second industrial revolution. It's going to be that fuel source because it's the only fuel source in any power system you have to have security of supply. Coal is the only fuel source that can be stockpiled. Natural gas is very difficult to stockpile. It's costly to compress it, and then renewable sources aren't there. Even if they were, they're consumed as they come. And people don't want to rely on nuclear, so that leaves coal. And coal, you know, for good reasons, has been the mainstay of the baseload generation. So that remains the case, and that's why all of these countries will continue to consume it. While they've done this, the air pollution problem has expanded exponentially. We now have a China where you can't breathe, essentially.
Right.
And I'm not exaggerating.
No, we've seen pictures of it.
Yeah. So the technology priorities for the industry are extremely clear, as Robin said. It's the need for a clean coal and the need for a dry coal. So that's where I think our company comes in.
Now, but what about the cost aspect? I mean, where it sounds like we're on the threshold of a technology breakthrough in terms of cleaning the coal. Is it still competitive cost-wise?
Yes. Yeah, very much so. I think what we have, our process is actually cash flow additive. And why is it cash flow additive? because our technology, let's start with the first one, that's for us is the low-hanging fruit, which is the Asian markets.
Right.
What's happened in Asia is that a lot of what we call low-rank coal has come into the overall commercial mix. The higher quality coals have been used up a lot, so now you're seeing a lot of low-rank coal, which means high-moisture coal has come into the mix. Now, our process is capable of taking let's say a 50% moisture coal, which is not untypical, and that's a $25, $30 commodity, and sometimes stranded commodity because it's not economically viable, and we can upgrade it to a $75, $80 commodity at a cost of about $750, not counting the royalty, which we would get, but even with that, the economics would show that investment recovery periods are under 3 years. ROEs, that's unlevered return on equity, would be over 35, 40%. And therefore, companies who use this technology are actually making money with it. It's not like the post-combustion solutions where people say, okay, I've got to comply, so now I've got to spend more money. Ours is a pre-combustion solution, and it is cash flow additive.
So, Robin, where are the main coal-producing regions outside of the United States? We're talking about the rest of the world.
Primarily, it is Indonesia, Australia, South Africa, Russia. Those are the prime. Those are and China. But although China's production is going down, their exports are increasing. Imports are increasing, obviously.
So these are the areas that you're looking to implement your technology in?
The immediate addressable market for our technology is in the hundreds of millions of tons of coal. The overall market is in billions of tons. There's been a huge amount of money being expended now on finding the solution and to find the right technology. We are, at the moment, we believe, ahead of the development curve, and it seems that we're only the only credible solution out there, and that's why we're getting a lot of investment dollars from Indonesia, India, and other Asian countries.
Looks very promising. Now, can you explain a little bit? So when you clean the coal, all right, you're removing, I guess, the
volatile matter.
And what happens to it?
Okay, the volatile, in our process, is the stage heating process. The coal is introduced and then subjected to different stages of heat, growing levels of heat. And in the higher stages, all of the volatiles are broken down into gases. The gases are captured and then they're condensed into liquid hydrocarbon compounds that can come out, fractioned into heavy and light, or if you're not fractioned, into a soup. And those are commercially valuable. We have in our own models, we're pricing them in the $30 per barrel range and getting very strong, compelling economics, but we're probably going to find when we do this that it's going to be much more valuable.
Yes, so there's a secondary marketing opportunity, business opportunity there from what you're taking out. But isn't the concern about carbon dioxide? I mean, you're still getting that. That's the whole greenhouse effect.
That is correct. And here we don't pretend at all that we're addressing greenhouse gases or CO2 per se, but we will point out that in removing, the volatile content, by the way, just so you know this, it's about 30% of the content of coal. If you remove 30%, all of that has its own carbon footprint. So that comes out. So what you're actually going to consume now is going to be a smaller amount of CO2, although CO2 itself is not being captured, it's not being sequestered.
What about price? Okay, now coal prices have come down. Maybe that's been as a result of a slowdown in growth in China, maybe slowdown in demand. But how do the longer-term prospects look? I mean, I've noticed that natural gas, which I guess you could say is a competitor to coal, especially here in the United States, that's starting to move back up. We're starting to authorize more export of our natural gas, which will probably cause the price to converge towards the global price, which could be anywhere from 2 to 3 times higher. I mean, it seems like the coal price outlook is very bullish.
Well, it is, like everything. As global economics improve, commodity prices improve, and if you look at the energy mix, oil is not coming down. Oil is going to go up over $100 again. You've got a diminishing supply against increasing demand.
But is there a diminishing supply of coal? I mean, coal, right?
No, this is the great thing about coal. It is virtually everywhere. It's accessible, and
so why would price go up then?
I mean, because the demand will go up. The demand will go up, and also you've got, as Ignacio explained, you've got a difference between the high quality coal, which has been diminishing, and the lower quality coal. And the huge resources are primarily low quality coal. That is a coal that has to be upgraded, and that is what we intend to do.
Now, you know, there are other players in the coal market, you know, Peabody, big companies that are active in this. How does your technology stack up to, you know, what others are doing? Or are they basically all embracing the same process?
There are very few, I mean, overall, there are very few players in the technology segment. Okay, Peabody and those companies have at some point in time partnered with some, you know, certain companies that have technologies that are competitive to ours, but they don't themselves, they haven't really homegrown those. There are only 2 or 3 technologies that have had any viability at all in the marketplace, and the difference between ours and theirs, in one case, am I allowed to name names?
Sure.
Okay, Kobe Steel, for example, their process it works. It does, in fact, dehydrate the coal. However, it costs $260 million per million ton capacity versus ours, which is going to be under 40, probably. Okay, and then
40 million.
Yes, for the million-ton plant. And then we
big
have
difference.
And then we have another company, GTL, and what they do is that they essentially dry the coal and then they briquette it at the end. Our difference is that our process does not destroy the coal. There's very little degradation in the process, so we don't have to pulverize and then briquette. Those 2 things add a lot of cost, and at the end, the briquette itself, in normal transportation conditions, do tend to break in hopper cars and so forth. So we don't favor it necessarily. I mean, it's sometimes required, but it's not the best.
Well, it definitely sounds very interesting, something we'll have to keep our eyes on. I want to thank you, gentlemen, for coming on the show. Really appreciate it.
Well, thank you very much for having us.
You're welcome. Anytime. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.